Do you have time to sing a goodbye song before you go?
Always Bear.
Hey, this was really fun.
We hope you liked it too.
Seems like we've just begun when suddenly we're through.
Alright, good morning traders. It is Tuesday, December 28th, and this is the pre-market prep video for today's session. So good morning to all of you, and it is looking like good night for the bears. So let's take a look here, right? Last couple of weeks, a little bit of volatility in the market. Really though, all we do is pull back to the weekly 21, find support, and now with a better looking daily chart, the uptrend should continue. So my thinking here is rest in peace to the shorts, pretty much. So for the QQQ, yesterday's key level here was around 16,450. We closed above that yesterday, and at the open here, we are grinding towards the previous all-time high. So a bullish daily squeeze here in the QQQ. I'm looking for this to fire long, and that should take us into early to mid-January. For the S&P 500 here, yesterday's clear level was obviously the previous all-time high. We broke through that, and we're gapping up a little bit here this morning. So this daily squeeze looks poised to fire to the upside as well. Moving on here to the Dow Jones. And even the Dow shaping up pretty good. Great looking weekly chart, great looking 3-day chart, and this daily squeeze officially fires to the upside as of this morning. And you got a pretty clear level of resistance here with your previous all-time high around 36446. So pretty clear level there. And then for the small caps, put a little bit of respect on the small caps name. I'm not going to try to get long here. I want nothing to do with the small caps. However, daily squeeze back above the 21, shift of momentum. At the very least, if the small caps can just consolidate and behave here, then I think your S&P, your QQQ, and your Dow Jones all heading towards brand new all-time highs. So, with the weekend watch list videos, these pre-market prep videos, I'm trying to bring you actionable ideas, none of which is based on the bullshit in the news, more so just focused on the structure of the charts at hand. So, one spot we've been covering here for the last handful of weeks is the semiconductors. Great looking daily squeeze, but the key here is even throughout all the selling pressure and the back and forth in the market, every single day I'm getting one of my buy signals. So these should be the first things to take off into new highs when the market kind of gets back on its own 2 feet. Well, it looks like the market is back on its own 2 feet. And I think the small caps here, actually this morning, I think we're going to open up at a brand new all-time high. So focusing on the structure, focusing on the trend and the indicators here, I think has been really important because now that the market is potentially about to break out, you are going to, you would have been served well focusing here on the semiconductors. So you got Qualcomm. That daily squeeze looks really good. There's LRCX, which is already breaking out here. Micron is off to the races. Broadcom is off to the races. And then in the Mastery group here, we've got positions in AMD. And I'm looking for AMD to head back towards its previous all-time high as well. So I love the group. Just make sure you don't chase. It's not the best entry at this point on AMD. Obviously on a Broadcom, you don't want to go chasing up at 3 AR. But I do think the group itself got a couple of weeks of momentum ahead of us here. So with that being said, I think NVIDIA is actually looking the best for a new entry. You're still trading to the 21 EMA versus up here at 2 to 3 AR like a few of the other semi stocks. So as long as NVIDIA can continue to print out a good-looking daily chart, momentum is starting to shift. There's green 10x bars everywhere. Inside the daily squeeze, I'd like to build my position for a push into 340, 350. So the semiconductors look good, and I do hope at least a handful of you have been taking action here for the last couple of weeks. Not the easiest thing to do, when CNBC is screaming that the world is coming to an end, but a bullish chart is a bullish chart. So the semis look great here. And then moving on to technology. Here's XLK ready to fire a daily squeeze, trading at a brand new all-time high yesterday. And then the QQQ itself, I think that's heading towards brand new highs as well. So in terms of tech stocks, Apple continues to be king of the hill. And though you're 4 weeks into a good push here, 4 weeks into the weekly squeeze firing long, I think you could have another couple of weeks of gas left in the tank. The move that we're looking for in the options room over here is a move into 183 plus. So at 183 plus, Apple becomes, I think, the first $3 trillion company. So that's a target we're looking for here. And we took our entry last week inside of a great looking 4-hour squeeze. So Apple has been king of the hill. It's still king of the hill. But then you got Microsoft creeping up over here as well. Great looking daily squeeze, green 10x bars literally everywhere, stacked DMAs everywhere. I think that's heading towards 350-ish. But how about Google? It's kind of a shame that the spreads are just crap on Google. But the structure here is almost perfect. Good looking daily squeeze, a good looking 3-day squeeze, and you got a great looking weekly squeeze here. So I think like everything else, Google is structured and gearing up for a move into brand new all-time highs. Then you have got Amazon. And this is pretty much just textbook chop fest consolidation. There are squeezes on a monthly, weekly, 3-day, daily, 60-minute, 30-minute, 15-minute, 5-minute time frame, and they all have yellow 10x bars. So you're in consolidation everywhere, but the momentum is a little bit neutral. So I would look at some point here for Amazon to get it back into gear, and the structure is just fine. There's just zero momentum. So I think in the interim, the Microsofts, the Googles, the Apples, definitely a little bit more attractive. But then in terms of opportunity, kind of outside the beaten path, because I love my FANG stocks. I love, the big semis. I love trading the big mega cap names. However, yesterday I'm getting my mastery into Dollar Tree. So Dollar Tree isn't as sexy or as exciting as a Tesla or an Apple, but that's a nice setup. Right? Stacked DMAs, green 10x bars, daily squeeze, 4-hour, 2-hour, 60-minute, 15-minute, 5-minute squeeze. We're looking for Dollar Tree to push into a brand new all-time high around 150. Then another name, again, not as exciting as Google or Nvidia, but you have one of the better setups, I think, in the entire market here in Ford. Printing buy signals every day for the last pretty much 2 months here. And now you got a bullish daily squeeze with a bunch of green 10x bars looking pretty ripe for a move into about, we're looking for 22. So one of my goals this year, and I do believe at the end of January I'll be doing a class about this. Listen, a lot of us love the squeeze. I think a lot of us have made the squeeze a huge focus and a huge kind of part of our trading business. Here's my realization though. As much as I love to trade the Googles, the Apples, the Amazons, only a handful of times per year are they going to offer that picture perfect squeeze, where in terms of creating consistency, but more importantly in terms of getting as many at-bats as possible. Because what I've done in my own trading for the last handful of years and what I've seen a lot of other traders do is work these squeezes with about a 70-75% win rate. Now, that's great and all, but if you're sitting around waiting for Apple, waiting for Tesla, you're not going to have the biggest opportunity set. So if we can work a 70-75% win rate trading the squeeze, then I think we want as many opportunities as possible. Right? So I love my big caps, but you got Qualcomm, LRCX, Ford, KLAC was beautiful. There's DLR, there's HPQ, there's Keys, there's Dollar Tree, ON, VRSN. My goal this year is to take as many trades as possible, so long as they're generating one of my buy signals. And then the key is, okay, 70-75% win rate is pretty solid. What about the risk reward? So the most important part is to try to work that 70-75% win rate with a risk reward where realistically, or ideally, you're losing less when you're wrong than you stand to make when you're right. If we can do that, you want as many at-bats, you want as many swings at it as possible. So, in these videos in my mastery, and in the options room, definitely trying to bring more opportunity to the table this year. Same setup, same entries, same game plans, just a bigger plate of opportunity while we wait for, the favorites, the Googles, etc. But this, my friends, is all I got for you here this morning. Wish you all the best here today. And then I'll be live tomorrow morning for pre-market prep as well. But structure doesn't lie. The news will lie. The experts on Twitter will lie. The structure. Structure never lies, baby. And it's a bullish one. So I think, rest in peace to the shorts. I think the market rallies into early January, and then we will take it from there. But as always, Chandler and I appreciate y'all being subscribers, and we appreciate you watching. And I'll see you tomorrow morning. And we shall prep live.